Hi everyone, Michael from Bullion Now, bullionnow.com.au. So one of the more unusual aspects of investing in precious metals when you live outside of the United States or you're not buying it in US currency is, in our terms, the Australian dollar, US dollar foreign exchange ratio. Now, it's something that is not widely talked about in the precious metal industry. Sounds really boring, but it is incredibly important, and there was a great example of this over the weekend. So I've captured a couple of screenshots from this weekend and actually from a few weekends ago as well, because there was another reverse scenario then. And we're going to work our way through it. Now, I know this does sound a little bit dry and boring, but hang in there because this is actually really, really important to get a grasp on, so you understand exactly what you're investing in when you're buying your gold or silver or platinum or basically any of the precious metals as a whole group. So what we saw on Saturday on Australian time, so Friday night US time, was the close of the precious metals market for the week. Now, in US dollar terms, and we're going to focus on gold in this case, but all four of the major metals reacted the same way. So the gold price actually jumped at the snapshot I took, which is just prior to the close US time Friday night. And it actually jumped $51.10, and there was quite a bit of a beat up over in the media over the weekend about how gold had moved up and why it had moved up, and the new outlook on life with the expectation that hopefully China is easing off on its COVID restrictions and those types of things. So a lot of the commodities in general moved up, but gold in particular jumped, as I said, that $51, which is US, that is, which is about 3%, a bit over 3% of the gold price in one trading session, which is quite good. Silver did even better. It jumped to $1.39 US, which was actually over 7% increase on the day. Now, if you were in any other country other than the US, you would have woken up to that exciting news, opened your pricing app or went to your favourite bullion store, looked on the pricing there and gone, hang on a sec, that doesn't make any sense. Spot price hasn't moved. What's going on here? Has there been a mistake or what's going on? What's actually happened, and you can see on this next slide that I've put up, in Australian dollar terms, the price of gold actually only increased $2.60 Australian, which is only 0.1%. So where we had a 3% $51 jump in US dollar terms, in Australian dollar terms we only had a $2.60 jump, which is only, as I said, 0.1%. If we go over and look at the British pound, it only increased 1.2%, which was actually £18.40. So why does this happen? And the explanation is contained inside the graph for the AUD USD. And we can see here that the US dollar in that 24-hour trading period moved from around about that 63 US cents to the Australian dollar to 64, almost 65 US cents to the Australian dollar. Now, people's eyes start to glaze over at this point, but what you've got to understand is that at this point, the foreign exchange market has actually worked against the precious metals market. So while all the commodities, precious metals included, thought it was wonderful that the China was possibly coming back, was getting rid of all its COVID restrictions, that meant more trade, more purchasing of all those commodities. Because Australia is very much a commodity-based economy, people also said, that's fantastic for the Australian dollar. Let's buy more of the Australian dollar. And that increased against the US dollar because people were taking their US dollars and converting them into Australian dollars. And that actually wiped out any gains that were made in Australian dollar terms of that increase in gold price. If you want to look at the reverse of it, you can see on this chart here where at the start of the day, the Australian dollar, so a $1.54 Australian dollars bought $1 US dollar. Correction, that was at the end of the day. At the start of the day, it was about $1.59 Australian dollars bought $1 US dollar, and by the end of the day, about $1.54 Australian dollars bought $1 US dollar. So everything became cheaper in Australian dollar terms. Therefore, gold became cheaper in Australian dollar terms. Now, to give you the opposite of that, if we go back a few weeks, I've also got the chart from back then, where we see that the US dollar price in gold actually went down for that day. It dropped $3.30 US. But because on that same day the Australian dollar went down against the US dollar, the price actually increased $26.40 in Australian dollar terms. So it swings and roundabouts. Sometimes it works in our favour, sometimes it works against us. But the takeaway point from this is that you've got to understand that when you're investing in precious metals, particularly gold, silver, platinum, palladium, when you're investing in those metals and you're not buying it in US dollars, because the whole world trades these in US dollars, but when you're buying it in Australian dollars or British pounds or euros or yen or any other currency, you're also playing the foreign exchange market at the same time. So if the price of gold goes up in this example and the Australian dollar goes up in this example, they can actually counteract each other. In fact, the Australian dollar can go to a point where, as we saw in that second example, where the price of the precious metal can go down and the dollar change is so great that it actually reverses the direction of the metal in local currency. So be really, really aware, particularly as we move through this volatile next 18 months, that you're playing two markets. And just because gold goes up or gold goes down on a world market sense, it may not translate to be the same thing in the Australian dollar sense, both in a positive way and possibly a negative way. All right, that's it for now. Any questions or comments, if you want me to clarify further or you want to join the general chat, just make those comments below and we'll try and discuss it further and go more into these sorts of things, because they are, even though, as I said right at the start, they can be a little bit boring, they are actually really important to understand for your investing future. That's it for now. We'll talk again soon. See ya.